Welcome back to Investing Talk podcast. Today, we're taking a look into a pretty complex corner of the market. We'll focus on one company, Canopy Growth, and the whole industry landscape it's trying to navigate.
And we've got some interesting sources to work with. There's a legal filing about a securities fraud lawsuit, which, always gets your attention.
Definitely. Plus, an investor presentation from Canopy itself, and a report digging into the U.S. cannabis job market situation.
Right. So our mission today is really to unpack all these pieces. We want to understand what's happening specifically with Canopy Growth, put that into the bigger picture of the industry's challenges, and pull out the key takeaways for you.
It sounds like quite the mix. So where should we start? Maybe with Canopy's side of the story, from their investor presentation.
Good idea. Let's see how they present themselves. They certainly talk up their global footprint operations in, over a dozen countries, 5 continents. It sounds big.
Yeah, and they really lean into their Canadian recreational market presence. They mention deep channels, supply deals for over 70,000 kilos a year, physical stores, online stores.
And they had that stat, that was from 2018, about having over 30% of available SKUs across Canada. So positioning themselves as a major player there.
What caught my eye was how they framed cannabis potentially disruptive ingredient. It's not just about smoking. They're pushing potential benefits like no calories, no hangover compared to alcohol.
Right, and citing science for things like anti-inflammation, anti-anxiety. They show off their tweed beverages as an example of that innovation.
That seems to tie into their R&D focus. They talk about this multi-year program over 2 years just for cannabis drinks.
Yeah, aiming for calorie-free, clear liquid, fast onset, long shelf life, all the tricky stuff. And they say they developed a stable microemulsion to do it. Sounds quite technical.
It's not just drinks either. They bring up Canopy Health innovations, talking about developing actual cannabis medicines.
Mentioning human clinical trials, 15 of them, including some phase I sleep trials and even animal health trials like for anxiety in pets.
And all this R&D feeds into their IP, their intellectual property. They highlight, I think it was over 140 patent applications filed.
Across a whole range of things, beverages, medical uses, devices, processing, genetics, pretty broad, plus those strategic investments like an Acreage and Jetty.
Right, mentioning the brands they operate, like the Botanist from Acreage or Jetty's Vape Tech. So, okay, that's the picture Canopy paints. Innovation, global reach, strong R&D.
A very forward-looking, positive picture, which makes the next source, quite a contrast.
Yeah, let's pivot to that legal filing. It's from a law firm, Glancy, Prongay and Murray, and it's about a securities fraud lawsuit against Canopy Growth.
Right. This isn't a company presentation. It's a legal notice. It's announcing a deadline for investors who bought Canopy securities between May 30, 2024 and February 6, 2025.
And it's for a class action lawsuit. So a suit brought on behalf of potentially many investors who feel they were harmed in a similar way.
The core claim is that during that period, the company allegedly made false or misleading statements and, crucially, failed to disclose negative facts about its business and prospects.
What specifically? The filing mentions significant costs the company apparently racked up.
Yeah, costs related to producing those Claiborne pre-roll joints for their launch in Canada, and also what they call indirect costs linked to the Storz and Bickel vaporizer devices.
And the lawsuit argues these costs were likely to really hurt the company's gross margins. That's a key profitability measure, and their overall financial results.
The claim is basically that Canopy downplayed these cost issues while at the same time maybe overselling how effective their cost-cutting was and how healthy their margins actually were.
The filing points to a specific trigger date, February 7, 2025. That's when Canopy released its Q3 results for fiscal 2025.
And according to the lawsuit, those results missed expectations. But more than that, the company reported that its gross margin dropped by 400 basis points. That's a full 4 percentage points, down to 32%.
Wow, okay. And the lawsuit directly links that drop back to those costs, the Claiborne pre-rolls and the Storz and Bickel devices.
Exactly. And, as you'd expect, the filing says after this news came out, the company's stock price fell significantly, which is where the alleged injury to investors comes in.
So for any investors listening who might have traded during that window, the deadline mentioned to contact the law firm about potentially being a lead plaintiff is June 3, 2025. Though, it also says you can just do nothing and remain an absent member of the class.
It's definitely a stark contrast to the investor deck, isn't it? It highlights potential issues with financial reporting and managing those operational costs. It shows how tough it can be to balance investor messaging with the realities on the ground.
Okay, so to try and bridge these two narratives a bit, let's quickly look back at the financials in the investor presentation. It covers Q1 of fiscal 2025, which is earlier than the Q3 mentioned in the lawsuit. Important timing difference.
Right. For that Q1 FY25, the presentation actually highlights gross margins at 35%. And they frame this as a big improvement from 18% the year before in Q1 FY24.
They say the improvement came mainly from their Canada cannabis segment, citing cost savings, strategic shifts, moving towards higher margin medical sales, and fewer inventory write-downs.
And also the international market segment helped, apparently due to higher margin sales in places like Poland and just a leaner cost structure.
But here's where it gets interesting, linking back maybe to the lawsuit. The presentation does note a decline in the Stores and Bickle segment's gross margin for that same Q1. It fell from 43% to 40%.
And they attribute that decline to a shift in product mix and using rebates to clear out older stock. Now, that detail about Stores and Bickle costs does seem to echo one of the points in the lawsuit, even though the presentation frames it differently, just as a segment performance thing.
Also in that Q1 FY25 presentation, they highlighted an adjusted EBITDA loss of $5 million, calling it a 77% improvement year over year. And free cash flow outflow was $56 million, a 49% improvement.
But it's worth noting, as you pointed out earlier, some of the historical charts in that deck only go up to Q2 FY 2019. That's pretty dated data when you're discussing FY 2025 numbers.
Yeah, feels a bit like ancient history in this fast-moving sector. Okay, so we have the company's story, the lawsuit's claims, some financial details. But none of this happens in a vacuum. Let's widen the lens with that U.S. cannabis jobs report.
Absolutely. Understanding the broader industry context is crucial here. So the report says the U.S. legal cannabis industry has just over 425,000 jobs right now.
But interestingly, even though national revenues grew year over year, the number of jobs actually dipped slightly from the previous year. That seems counterintuitive.
It does, but the report points to three big headwinds hitting the industry hard in 2024. First, a serious lack of profitability for many operators. This is largely blamed on regulatory costs and especially federal tax burdens like 280E.
Right, that tax rule means plant-touching businesses can't deduct normal operating expenses, which massively impacts profit. The report mentioned a survey where only about 27% of operators nationwide were actually profitable.
Yeah, 27.3% profitable, another 40% just breaking even. Those are really tough conditions. The second headwind is oversaturation in many markets. Just too much product, which leads to price compression prices falling, and that kills margins.
And the third?
High state and local taxes. These can make legal products so much more expensive that consumers just stick with the illicit market or maybe switch to hemp-derived stuff.
So those regulatory hurdles aren't just annoying. They directly impact the bottom line by keeping compliance costs high. It forces companies to be incredibly focused on efficiency, doesn't it?
Exactly. And the high state taxes are a real killer for participation in the legal market. The report stresses that getting consumers into the legal system is key for growth. States that keep taxes lower and access easier tend to do better.
And that oversaturation point, turning cultivators into price takers. That sounds brutal. They just have to accept whatever the market will pay.
Pretty much. And that low price ripples through the whole supply chain manufacturing retail. Combine falling prices with rising costs for things like labor and compliance, and you can see how margins get squeezed thin, leaving little room for hiring or investment.
So the report calls this a strategic reset for the industry?
Yeah, hiring isn't about rapid expansion anymore. It's more careful, more strategic. Companies are focusing on operational efficiency, just trying to survive and hopefully find a path to profit in this tough climate.
It mentioned the gig economy, though. Temporal's thriving.
Right, particularly in areas like cultivation and processing where labor needs can fluctuate. It gives operators flexibility to manage costs, and it's also a way for workers to get a foot in the door.
Now, the report also stresses how different things are state by state, right? Because there's no federal framework, no interstate commerce.
Absolutely critical point. The landscape varies hugely. You've got states like New York, Ohio, Maryland, seeing job gains in 2024.
Why them specifically?
Often linked to new adult use markets just starting up or expanding, more licenses being issued. Maryland, for instance, initially had lower taxes, which helped pull people into the legal market, though they did approve an increase later. New York started slow but picked up as more stores opened. Ohio's new market is pulling customers back from places like Michigan.
Okay, so newer markets drive growth. What about the mature ones?
That's where you see the losses. States like California, Illinois, Arizona saw jobs decline. These markets are often dealing with slower revenue growth, saturation.
And those high taxes again, especially California and Illinois.
Exactly. High taxes discourage legal buying. California's situation is described as particularly tough, high taxes, plus many local governments still ban sales altogether. So even though it's a huge potential market, the reality on the ground is difficult. Oversaturation and consolidation are hitting hard there.
So looking ahead to 2025, what's the report's outlook? More of the same.
Pretty much. It doesn't expect any big federal policy changes soon, so operators are likely to stay cautious. Growth will probably continue to be concentrated in the newer state markets. Mature states might even see revenues continue to decline if these pricing and tax issues aren't addressed.
But despite all that, the report still ends on a somewhat optimistic note. Growth is still expected overall.
Yeah, it suggests growth is still on the horizon long term, even with the risks. The industry seems to be adapting, hunkering down, maybe waiting for regulations to eventually ease up or markets to stabilize. It's a picture of resilience, maybe, but also significant struggle.
Okay, so let's try and tie this all together. We have Canopy Growth, presenting itself as an innovator, investing in things like beverages and medical IP, but also facing this securities lawsuit alleging they weren't upfront about significant costs, particularly for things like those Claiborne pre-rolls and Storz and Bickel devices which hit their margins.
Right, specific operational challenges hitting their financials.
And then we have this broader U.S. market context where everyone is struggling with systemic issues. Lack of profitability due to taxes and regulation, oversupply crushing prices, state taxes pushing consumers away.
A really tough operating environment across the board,
Yeah.
varying by state, but generally difficult.
So it leaves us with a kind of provocative thought, doesn't it? Considering Canopy's specific challenges and these massive industry-wide headwinds, how much can innovation in products and technology like those fancy beverages or medical applications actually move the needle? How effective can that innovation be against these really powerful forces of regulation, taxation, and market saturation when it comes to driving real growth and, crucially, profitability?
That really is the core tension, isn't it? You can have fantastic R&D, great products, but if the market structure itself, the taxes, the regulations, the competition, makes it almost impossible to turn a decent profit or compete with the illicit market on price, how much does that innovation ultimately matter to the bottom line? It's a huge hurdle.
It certainly puts the company's challenges and the lawsuit into a much broader perspective. That was quite a journey through these different sources today. We saw Canopy's strategic vision clashing with alleged financial reporting issues, all set against this backdrop of an industry facing some fundamental economic and regulatory battles.
It absolutely highlights why you need to look beyond just the company's own narrative and consider the full context, the legal challenges, the financial realities, and the tough market dynamics they're operating within.
We really hope this deep dive has given you some valuable insights and things to think about. We genuinely love to hear your perspective. Please do subscribe if you haven't, give us a like, and drop a comment below with your thoughts on Canopy growth or the state of the cannabis industry.